Right, you guys, we're going to go ahead and get started. It is Forward Focus and it is April 17th already. You guys all holding up out there? Anyone started running around in their yard crazy like? Other than Sean. Getting chewed up in the market, that is not good. Make sure you are going back and keeping your trading journal, you guys. Go back and find out what is going on in your trades that you're seeing repeated. It's happening right now. What trading journal? I'm gonna reach through here and smack you, Carl. I don't endorse violence. I'm just totally kidding, kind of, sort of kidding. Carl is, let's see, Carl, who are you? Who is Carl? Carl has been with me since, I don't know, 12 years, 13 years, kind of off and on. He was in one of my old trading rooms that I did way back when we were all like text based years and years and years ago. He keeps threatening to show you guys pictures of me with cropped hair. So what do we got going on here in the market this week? Well, it's been, pretty strong. We've had really good earnings so far. Of course, it's still early, but some of the big names, of course, Netflix, Amazon, we've got Gilead going strong. So those have all been coming out, and we looked last week at a couple of possibilities for how the market can correct off of this support. So we looked at first the one that is basically like what would happen if you had like a gap type of play. Let's put this on a larger chart here. Find the right NQ chart for us. Here we go. So one of the ways that we looked at this was there were many ways that we would get this massive flush and then we would see this two-wave move up, but it would struggle and we would get a shift and it would pull it back down. And if we look at what happened here on gold, actually, this is exactly what we saw going on gold here this morning. And we've been looking at a couple of examples of this, just looking at more of the intraday charts this week. Let me show you what that gold looks like right now. Oh, dragging him in. So gold is, go to the other channel. Oh, hold on. I'll slide this over here. I'm gonna kind of like pull this back a bit. All the way back to where it started. Okay, so here's where we were first coming into support here a little bit ago in gold. And you'll notice there's a little bit of this shift in momentum here as it comes into around the 76.4% retracement. If we look at that shift, it's very similar to what we had going on down here in the overall market when it was just kind of shifting into that low zone. So it gave that bounce the first initial bounce, that is like what we've got here. And then we had a correction. It was just coming off of that level, just like right in here on the NASDAQ. Let's scroll on down here, show you guys some more of the continuation. Went into congestion, so that's like our congestion here. And then it started again. So here's the second move. And then this is where things get do or die-ish. Because at this point, what we've got is we now have two main waves of upside. And the market can decide, hey, am I going to hold and try to go in and push further, or am I going to fizzle out and die? And last week, if you go back and you look at last week's forward focus, we looked at a couple of examples of how that can play out. So here, what we have is it went into a second wave of correction here. So I was long from down in here. And what I did was I didn't hold through the pullbacks on this one. So a lot of times, like if I'm expecting a major reversal, I'll just kind of hold on. In this case, I just played the two impulse waves separately. So in from the 2B down here, could have added here, didn't, was out at those levels and then got back in on the retracement. But what we would normally see at this point is that this is either going to start to gain speed and go into like a 1, 2, 3, pull up sharply, basically retrace, you know, good 76.4% of that drop or further, just depending upon where it is in the larger market, or it will shift and fizzle. And in League of Traders this week, we saw examples of both ways where both of them played out. So we talked about it last week in Forward Focus. And then this week, we saw a number of examples just on the intraday charts on how that played out. And in this example, the trade ended up fizzling out and offering a reversal. So here's where I said, you know, I don't like when I see this happening, because what is stronger is if you get like a nice two-wave correction where you see kind of a little bit of a shift in momentum, and that helps propel the momentum more strongly. Now, we will have examples where it will do this and then surge. So it's not that it totally ruins it, but it makes it more iffy. And here you can see it kept trying. It made it into that resistance level here, which was my main kind of lower target here. But then at that point, look at what happened. It went and based here. So like we talked about in League of Traders this week, what should have happened is that this should have held up at this level and done like a 1, 2, 3 move at that point. So that means that you're going to be keeping your stops wider if you're looking to hold on to that for a larger move. You'll keep it wider to start with, but then once you get past that two-wave correction where there are more time corrections, you can start tightening up your stops using just under those smaller little pivot moves, because it should take off. And if it doesn't, then you end up with reversals like the avalanche that just triggered right here. And this went and dropped here pretty quickly. And so one of the ways that we were looking at how the market could do such a similar move is that its moves up were a little bit faster, but it could have then gone and done that two-wave correction and then done another two waves before it would try to reverse again. So one of the ways that the market was lining up for potential going into this week was that it had the drop like that. It had the moves up, and then we were at that critical point here. So it had the potential to then, you know, do that trap and turn around and do the two-wave move down, which could then go and do another two-wave and then try to shift after that point. So we looked at a lot of examples where that happened, but we also saw a couple of examples where the opposite happens. And instead of going and doing that shift at that point, it can go and gain momentum and still manage to hold up. Right now, the market's trying to do that. I was not expecting that to be the main way that it played out. It was a possibility that we looked at, so it's not like it's something that caught off guard or anything, but it wasn't what I was really looking for to start with. But we are going into earnings. So that always adds that extra bit of kind of uncertainty there. But here you can see where it had that kneecap type of zone and went and managed to do that measured move here. Now we're right at a 76.4% retracement. So this is a key resistance zone again for the markets, and that's why we're seeing some of this kind of pullback here in today's session. Let me put that on here. And this is such a key retracement level, you guys, that if you are not watching 76.4% retracements, then you're going to be missing out on so many clues as to what's going on. So when you get that 76.4% retracement, if you have a strong trend move, that is a really good zone to get a bigger correction happening. So in fact, that buy on the gold chart that I showed you was very highly influenced by a 76.4% retracement. That's that orange line down here. It's a 76.4% from a bigger time frame. Let me see if I can show that to you on a larger chart. There it is too, but so here. So it was this move up, and then you see we've got a pretty steady trend here on the downside. So that makes that 76.4% stronger, especially if you have a little bit of a shift in the momentum into it. This low down here was also a 100% extension on a continuation and a 123.6% extension on a continuation from a bigger avalanche that we were watching earlier in the week. So major support level here. That's also what allows this kind of double tap there to give a reaction at that zone. Let me show you bigger time frames on gold. So we were tracking this avalanche over the last couple of days. Grab it where it was first starting to form here. So here's where we were first starting to get it developing. And what you can see is it had the two wave moves up, but the timing's a little weird. It kind of like did like a little bit of an extra flush there. So the trigger on this actually had like a smaller two wave back up right smack into 76.4%. Again, let me show you that as this progresses. These are some other trades thrown in here. So this move right here, back up into there, is a two wave measured move, 76.4% retracement of this drop. Here it is. See that? Two wave move, and then this is 76.4% retracement right here. And that is this portion that you're looking at right here. So that triggered this, and then you can see the continuations here on the downside. So strategy we were learning yesterday. Again, 76.4% here. Here's the 123.6% extension I was telling you about. So then what this did was that pulled back 76.4% of that bounce, and that's what allowed for the potential to bounce further off of this level. We just didn't get that continuation. Here's some more details on this. So here's what we're looking at. And so this is what is, one of the possibilities that you have when you've got that really strong move down, where it's coming out of an avalanche or a momentum reversal or a 2T, and the momentum is really strong on the downside. And you're looking at, okay, how far can it really react off of that support level now? And that's why we're right at that do or die point in the overall market there. Let me kind of scroll this back over. I'm going to go back to our NASDAQ here. So you can see right when it came up into that zone that I posted earlier today, it didn't quite hit it, which this does mean that we could see this kind of chop around up here a little bit more as we go into next week. There's still a chance for this to retest that and do a better test. here's what we're looking at on the 240-minute chart. So here was that first measured move, and then it's kind of shifting. So this is kind of starting to create a shift here at the highs. Overall momentum still pretty strong on the upside. So this still leaves it open for the possibility of retesting this zone, but this is a pretty good resistance zone here. So I would expect things to chop around a lot more as we go into next week, a lot more back and forth action. Let me show you guys the ES. Look at some of those other ones here. Let's see if I got ES open. We found some buried treasure yesterday that was Mexican pesos in my courtyard. So I was like, hey, what's this actually worth? Unfortunately, the bills were all disintegrated. There was like 900 pesos worth of bills from what we could detect. I have no idea why somebody buried them behind a tree in the courtyard, but they did. So here's what we've got going on the ES, not nearly the retracement level because we don't have as many of those big tech names there. So what we're looking at here is that this still has, it's holding up pretty well. So the main thing that happens with these moves is that even when they do manage to recover, they're still usually going to react and come back down again, especially since we already have a couple of examples here, and then it was able to go and push to higher highs. So with that 2T here on the bigger time frame, it's very difficult for that to break those previous highs. So what I'm looking at is that there's a lot more strength than I was originally expecting. Things are holding up better than we were originally seeing. I don't think we're out of the woods yet, though. I mean, I think that the outlook that we were seeing, where we could still get those kind of movements where it kind of goes back in here and then, shifts again, it's still a possibility. But with the way that this has pulled up so fast, it's easier for it to chop and go like that now. So you can kind of see an example of that right here. So I'm not sure, as far as like what I'm looking at for long term, I haven't been doing a lot for investment stuff at this point. I've been kind of like taking a wait and see approach. There's some positions that I've made, but not much. And what I want to see is just kind of things to settle down a little bit more. Put this on the 240-minute here, and you can kind of see that shift here on the 240. So what it's doing is we're at what that we would typically call like a zone of pain, because what we have is we've got one move up, two moves up, but then it's tilted. So is this going to hold with a momentum reversal and do like what we were just seeing happening on gold, where it basically, what gold did was it pulled back here and then kind of crept and then crashed. So it's still doing a creeping type of move. Can it crash here or not? Or is it doing it as a tilted correction here, so that this is first correction, this is second correction, and then that can pop? We are right at that do or die point for either one of these to take place. And this is something that it tends to be a bit more of a crap shot when you see this type of thing happening, because sometimes it will go up and sometimes it will go down. And I should go back and, see what we can find for like statistical analysis on it, but it's something that I usually prepare to go either way, because I've seen it go either way so many times, and it just comes down to what happens in this last little portion here after you get those three highs. This is called a false first high, because these are the highs that are more evenly spaced, where you then get the parallel channels. So those are the ones that matter the most. So this is our real third high, 1, 2, 3. So this is where this could go and fall in and create a reversal pattern. And sometimes this could even mean momentum reversal plus at this zone. So even with this start to go and break down, it doesn't put it out of the woods for retesting and making a new high first, because it can go and do this. And that's kind of essentially what we saw happening on that gold chart. Let me show that to you in the background again. So if we looked at this here as this is the second correction, then here is the first correction, here's the second correction. So on the ES, this is the first correction, and this is the second correction. The difference is that this portion here was a little bit shallower when it kind of put in those higher highs. So when gold went, you can keep seeing the kitty cats. When gold went here, this push up is basically equivalent as that push. And it managed to make it a little bit higher coming out of it, but then it flipped. And what led to that flip was just this minor change in momentum right up here. So if you're looking at this as your trading channel, and in the ES, it's basically your 3 highs there, that could come down there, do that base, and then flush. So that's the main risk that the bulls have right now. Does it do that little shift up here? If it holds up, then it's going to do what we were talking about in like at the start, where it holds, does kind of a little base here, and then tries to break higher. If you go back to last week's forward focus, there's a couple of examples of that. And then those of you in League of Traders, go back and review this week's logs, and you'll find more examples too of both ways, so that you can see that detail at that kind of end zone. This is why it's called a zone of pain, because it comes down to a really little spot, and a lot of times traders will start hedging and placing bets either way, get trapped, and then it goes the other way. So it's a good spot to get chopped up as well. So there's an example of it failing. And let me see if I've got a example in here fast that I can see where it succeeds. And goes up. Basically what it does is it starts out with 2 shallow corrections and then goes and gains speed. So you have that here, actually. I mean, it's not the same trend placement, but this is what you have. You've got the slower moves, and then see how this comes up here and basically hangs on up there. That's what you would need to see to then get the continuation for that move. So you get the 2 slower moves and then the continuation. Now in this, of course, you're also looking at the bigger continuation versus coming off of a low, but it's the same idea. Let's see if I can find a couple other examples for you. And this is the same, similar here. You've got your shallow, shallow, but it's not as clear cut. Here's a good example. So see how this starts out like that and then goes like this, pops up, does that little move there. And that allows it to do that continuation where it keeps going, but it's holding there. And this is just on like a small 5 tick chart, but I was trying to show other examples of this concept. So that's what we're looking at as like the potential right now. See if I have any others on here. Stand out. What happens is they start off with the two slower. Here's one. So see here, you get the two slower, and then it pops. But then look at these corrections. So compared to what gold did, gold went and at one of these levels, it went and did that, and it had that avalanche, and that's what turned it around. So if the market holds up like this, that's what can lead to that extra pushback up. You guys see that? So right now we would be looking at the NASDAQ would be tilted like this here, or the ES rather. And so that's how we would get that to be able to continue. And then the ones that fail on like these tilted moves here, when it fails, you'll get things that will shift that momentum and bring it back down. So even this, like I said, it can go to a momentum reversal plus where you get your three highs, can go to a higher high and then fail at that level too. So even this high here wasn't a confirmation that this has totally succeeded. It wasn't until this had that shallower pull here and then managed to go. So that's what we've got to look for on that ES. It could flush down here, trick people into thinking, oh, it's done. Go and do a 2T, still turn around, or shift here and go higher. So those are the two possibilities right here. Let me show you that ES chart again so you can see that. Kind of impose this here on the top. Where can I fit this? Right there. So what you're looking at is here, here. So you can see how that flushed. So that could flush, could still pop up, but then that's not even positive that it's done because it could still flip right again at this zone. So it's just coming down to watching those smaller momentum shifts basically on a, you could even go down to like a 60-minute chart. This is a 240 down here, but you could even drop down to a 60 or 120 to kind of help you out. I like the 240 because it gives me a little bit of a bigger picture, but either one of those would work. So this is a good example that shows when it's still able to recover, but then this zone would be the previous high, and that's where it would have massive trouble again. So advanced trade management would have to be a trailing stop. Yeah, so once you get past those first two congestion levels, then you can tighten up your trailing stops. So these two for the first corrections are the main ones. So here, but you wouldn't want to use under this low if you're looking at a much bigger hold. Like if you're looking to hold that long term, you wouldn't want to use under that low for a stop yet. You'd have to wait for this to put in a low and pop. And you can change it with advanced trade management if something happens, like if it falls and then starts to base like that, then you can use that channel break to get you out. But you wouldn't want to use it just under this low because that's like doing this. You know, you would get fleshed out if it went and offered up the continuation like that. So like on gold, what I did was basically as each of these new lows was made, you would go and move your stops under that because at this point with the two shallower corrections, it is either going to fail here or take off. And you're correct, Donna, we do not have deep V's here. This is not a deep V here. Neither was this right here. So that makes this one a pretty good comparison to if this ends up holding and gaining strength, what it would probably look like. And again, we had a couple more examples from last week too in Forward Focus, if you go back then. What day was that? Ooh, good question. I am not sure. It would be this week. Maybe the 14th. 13th. It's gonna be the 13th or the 14th. Oh, did the image say it? Sorry. Oh, that would have made sense. Looking down there. I was trying to look down here. Lorena caught it. So there's your time date when the image was captured. But here you can see that I was scrolling back. So it's still possible it could be the earlier, but yeah, that's probably the 13th. All right, let's look at some other markets. Karan wants me to check out natural gas. I grabbed some of those here for us. Let's see, where did I post them to? Gotta find out where I stuck them at. Is it the main channel or the other channel? Karan. Man, I've been fighting a migraine all week, so it's kind of like, ugh, I'm off and on here. Maybe easier if I just go and repost them, right? Oh, there it is. Okay, so here's what we've got going on. NG, this is basically your third evenly spaced low zone, but what's going on here, you guys? What's happening with the momentum on this? They're all kind of right. So, I mean, when we're transecting this, and we're kind of going right through the middle of each of these two-wave corrections here, what we've got is a bit more of a price correction and then more of a time correction. So when looking at this as, you know, potential to hold this zone and reverse, the time development is perfect for it to try to do it, but the momentum not as perfect to try to do that. So this is what we would call, again, the do or die point. So is it going to break? Is it not going to break? The main concern here is that it could be a two-wave move that can go and gain speed again on the downside. So what we've got to watch is what's happening on the smaller time frames here, because if it's going to flip and hold, this is the exact point it would do it. And if it's going to fail and drop, this is the exact point that it would do it. So just like I showed you on gold, where that gold, it was kind of the opposite. But if we drew like what that opposite would have been, it would have gone like this, kind of shifted, and then pop. So that's what gold did when you flipped it over. So right now we can't see that shift at all on a monthly time frame. So there's nothing to give us an indication that that's going to happen on a monthly time frame right now. Go down to smaller time frames. Weekly time frame is kind of shifting momentum a little bit, but there's again not much confirmation that it's enough to pop it, because with kind of one wave down here and then the shift, it could still do that confirmation with breaking the channel, where it's just treating this shift with these slightly lower lows like it would hugging a channel and break lower. So we are still seeing that risk here. Now here's the daily. And the daily is where things are not quite as doomsday-ish for natural gas, because it is trying to get these pops happening. But the pops are still within this channel. It hasn't been able to break out of that channel zone. So in this pulled back way back here to do this retest, what we have is that this could still just hold like this and break and go and continue lower. There's not enough confirmation yet that this is going to turn around and give us a bigger bounce at this point. This is a zone where on intraday charts, if I was saying that I'm going to place my trade looking for a bounce to maybe here, this would be like my typical target on a setup, that if it held, that would be what I would be looking for. So what I would want to do is then I want to be trying to buy at these smaller time frame setups, like this 2-wave double tap or this little baby 2B here, and partialing out at resistance levels, and just kind of trying to accumulate a position where by partialing out, adding back in, partialing out and adding back in, I get to the point that if this goes and flips, I still can make a gain on it because of using the advanced trade management techniques that I teach you guys. So it's something where you can still take that chance, but be aware that it could be a minor shift that could flip that again and turn that lower again. Usually it would be something that would look like something like a head and shoulders or such. And even that's not going to be a total confirmation that it could break, because we could be seeing that as like 1, 2, 3. That could be like a 2B and then still get another pop right there, where it flushes one more time and then tries to pop. So it would treat this as 1, 2, 3. And the way I'm counting that is because I've got 2 main clear lows here, or 2 main clear highs here. So even though the lows are kind of all over the place, the fact that there's 2 clear sets of pivots tells me there's a low first, a low between, and a low after. So this could give this action in here and then flush and then still turn. So we can't rule that out yet either. So be very cautious on longer term, like just like building and holding on do or die type of thing. What you want to do is make sure you're using advanced trade management so that if this happens, you've got opportunities to scratch the trade without a loss, or even take it off with a gain by going in and out at these levels to build a position, and then trying it again if it does do a 2B. And if you're on the short side, again, watch it really closely for those smaller shifts in momentum right now. So I did a week on advanced trade management. I think it was like about a month and a half ago. So if you haven't studied that stuff, go back and do that, because that is going to give you an even better idea, because you'll actually see examples of it. Those that are newer to trading, this is something you would just want to avoid right now until you work on developing those skills, the advanced trade management stuff. Aussie dollar, we'll pull up AUD, USD. Lots of action in currencies lately. I told you my son, we found that money and he's been kind of obsessed with it. Let me show you that. While that's kind of loading, let's see if I still have that up here. Look at this. I was like, oh, hey, that's maybe $50, but then I'm like, oh, whoops, no. Peso jumped. It would have been $50 a couple months ago. Now it's closer to 35-ish or something. This is kind of on this daily chart. It's one example of when you get the flush and then you still manage to get a retest. I'll put this on the 240. Maybe I don't have a 240. I'll put it on 60. Oops. Let's see. Need to add some more days. So this is actually a very beautiful 2T here. Gave the short. And right now it hit target 3, which is something that we will usually see hit a good 90% of the time. It's $39. We'll see that hit a good 90% of the time here. And if it hits it faster, this will go into an avalanche and break down. It kind of slowed, which makes the avalanche potential a little bit more iffy right now. So this can go and do that kind of slower recovery thing, where the slower, and then try to gain. We'll see. But this is an iffy spot for trades right now. More scalpish. Here's our Aussie. So you've got the 2 waves. Really, again, a great exhaustion pattern here. See that perfect 2-wave movement right there? And then you get the shift here at the high right into these previous lows. So really good resistance level here. Let's look at this on a daily. So this is where we run into that same kind of risk. You know, it's easy for this to try to go and shift and then pull back down again. So these are pretty strong moves up. Here's the next kind of resistance zone up right here. So this could flush again a little bit, still manage to creep, but be more likely to do a creeping type of move and then come back down again. If I was looking for what to expect next on this would be like my main probability of what I would look for on the daily time frame. That means that over the next month or so, back and forth action day to day is probably going to be choppier. We're probably going to see a lot more overlap from one bar to the next. Basically similar to this type of stuff here. It's just steeper on the upside. Euro dollar. See, I had that in the back corner. There it is. This is, I'm telling you, this top here, like I mentioned on gold, I hate when it's doing that because, see, this gets to like that do or die type of zone of pain too, where you got the sharp move and then you're just chopping, and they can break either way. This could have broken quickly to the downside. This could have broken quickly to the upside. Here's one example where it just decided to do neither. That's actually the least of the three possibilities when this happens, when you've got the movement and then the shift. This is the least likely to happen, where it will just kind of keep going and just get messier and messier. Usually one of the first two options is what you will see, and that's why we were focusing on those. But this is a tricky zone to trade in. So this is going into symmetrical triangle. So these often can do a false break one way and then flip and go the other way, and then just kind of widen up so that you get a bigger range forming back and forth. Sometimes you will see this go, and so if it holds this here, it could go and do that and do the two wave down. So like that would be what one of the possibilities was that we were looking at on the NASDAQ overall, on the indices overall, where with the bigger pop, if it comes back down enough, what can happen is it can get this pops. This is like right about where we're at probably on the NASDAQ. And then it comes down and it can go and do that second wave like that, kind of pop again, and then do another two wave like that can go and do a bigger bounce. So that was one of the possibilities that we were looking at in the overall market. And it's a possibility here on the euro dollar too. But what it would have to do is at this point, it would need to do kind of more like a kneecap, like it paused in here and then put that second wave in pretty quickly without so much doing that. We would want to see it happen more quickly. Let's see, what else would you guys like me to look at here today? Tesla? Tesla did not have that second pullback down here. So if it had like that second base here, then it's easier for it to go and gain speed and actually have that potential to hit the higher highs. It didn't do that second one. So 76.4% retracement is going to be a bigger resistance level to watch for, but it's still kind of iffy because it could still treat this as if it's a kneecap and still manage to go back up to this previous high zone. The momentum in here right now is not weak enough to give us a good flush yet. So you can see intraday here, we're at a resistance zone, but the upside moves are still pretty strong compared to the pullbacks. So again, this is that zone of pain area where you've got 1, 2, 3 highs. It's not quite given any sort of a confirmation. You wouldn't confirm this until that actually broke that high, and it could break it just a little bit and still turn around. It has to have like a solid break where the bar breaks above it, closes it, and still manages to go the next day or the next bar. So this can still try to turn around with a shallow avalanche here. I probably wouldn't do much at all with Tesla right here. I'd be very nervous, even though it's trying to form a shallow avalanche, I would be very nervous to take it because of the larger daily time frame. And in fact, here, if you're looking at this, so this is at that do or die point, like we were talking about with the two shallow moves, right? So if this is going to go and follow through, what you would see is it would come up here, maybe pause, and then gain momentum. So just like we've talked about all session, but it's right at that time point with the two corrections, with your two main moves down, that if it breaks, you could get shallow avalanche coming in. I don't think that's going to happen though, the way this is forming. I think that this as like an intraday, it would be a zone that right here, if it holds, you're basically dealing with your buy, and then you'd have to see immediate follow through. And then you would expect more than a measured move up on this if it gives you that immediate follow through. But if it can't do that immediate follow through, if it just kind of hugs along here, that's when I wouldn't hold for a full stop. I would just bail on it on any break in a channel. Shallow avalanche is when you've got the slower pullback to start with compared to the upside, and then you've got your two-wave correction, and then it breaks. And so it'll usually do it with like a 1-to-1 ratio. We're kind of past that, or it can do it with a 3-to-1 or 4-to-1. Those are like your key points where you get the triggers for continuation. So sometimes you'll even get a false move here, and then it'll go and base out twice again, and then go. And it's not holding where it should if it was going to continue up here. Are the king and queen working against or together on the larger time frame? They are, I mean, so far they're working together on the bullish side, but they are at a key resistance level. In the indices, they're at that key point. You know, it's hard to decide because momentum is shifting here. So your queen is starting to work against your king. King is trend placement, queen's momentum. Could it be a momentum reversal? Yes. So that's what we were talking about. So even though it could try as a momentum reversal here with the three highs, it still might come back and pull higher. So if you missed what we were talking about earlier in the session, go back and rewatch today's session and you'll see the details on that. Walmart. Walmart, of course, doing well right now because of all of their abilities to provide for everyone quarantined right now. That was a 2T, but we're getting some extra strength here. I don't see this turning around right now. It is still extended, but I think a turnaround on this would probably be a slower turnaround. Intraday, I mean, the trend is extended, but there's still room for it to keep pushing. You can even get this as an extension. So it can still push up there to like the 137 zone into early next week. This is still doing what we talked about last week. It's just not, had a little bit more weakness. So you had that trap. So this is still kind of doing more of a risk that it could come back down. So it's actually even more of a risk of doing that than it was when we talked about that last week. I'm going to see if it's doing a smaller avalanche in here. So you got the 2T, well, kind of momentum reversal with the 2T. And it's kind of trying to form a megalanche here, which would be a widening avalanche. Looking at spacing between the highs. So this would be like your do or die point. If that's going to break to the downside, it will be by the 21st there. Apple downgraded. A very typical parabolic exhaustion here. I'm not surprised to see this was downgraded. It doesn't have any advantages in our current economic situation right now. This is one of those where even though this is coming up strongly, that 76.4% zone could just totally stall this rally. And even a double top, it'd be very, very difficult to break this high. I'll put the retracement levels on here. We're probably around 61.8 right now. Yep, right there. If the weekly closes have been higher each week, does it mean it could move up? Not necessarily. I mean, it's part of something that like longer term investors will look at and like portfolio managers and such, but they're also going to see that larger picture and that larger extension and the fact that when this crashed here, it came back so far that even trying to recover here, all of that is going to be huge resistance at this point because each of the waves up on the monthly time frame has been stronger than the previous one. So then when you do get this rapid flush, generally speaking, it's harder to break those previous highs. That's what we were talking about in the overall market too. Richard, yeah, Goldman Sachs downgraded it. Was that right, Chris? I read it, but I don't recall which one it was, but I think it was Goldman Sachs. Yep. Chris says yes. Yeah, I'm not surprised. I think you've got people are going to be like individual people are going to be more cautious on how they're spending their money too. So money is going into Walmart. It's going into Chewy. It's going into even Amazon. But Amazon is pretty extended too. But there you go. You can see. So Amazon's actually with the potential for a 2T, but I'm, again, would be really cautious going against this. So you've got the 2-wave here with the megaphone. So it's probably going to slow here, but still can hit higher highs because this momentum picked up so much. Chewy, let me pause. Chewy can still see, is doing like the same thing. So yeah, these are going to do some shallow corrections, but overall, I think we're going to still see these hold up over the next couple of months pretty well. And even with like, potential for lessening social distancing eventually, a lot of times when people develop the habit of going to online shopping and things like grocery delivery and stuff like that, even when social circumstances can change, like maybe risk factors lessen, the habits are still there for people. So once they switch to using something, it's less likely that they're just going to stop. You're not going to get like that massive, hey, everybody is fine, we're just gonna go back to normal shopping. "28 days to develop a new habit." Yeah, well, let's see. I haven't gone shopping in about 40 days. So I have TNT. We'll do this one, and then I know I didn't get to everybody's, but if you want to bring them up next week, for those of you in League of Traders, we can look at them then too. So this is the same thing. It's such an extreme drop. Like this is about the 76.4% retracement, maybe a little bit higher. Little tiny bit higher. So the previous high zone is going to be a really good resistance level, but something like this, what's really interesting is that this comes out of this big range, right? It drops down and then pops back really fast. A lot of times when you get a range breakout that goes like that, it can actually reestablish a stronger trend again. Usually this would be a little bit more of like a nice V, inverse V to do it. So this is a little bit faster than I would usually expect, but it still has that potential. So I definitely wouldn't want to go against this. And then oil, I had some charts up on oil too. Let me show you that fast. Is this a runaway gap? Hold on, let me look at the daily. It could be a combination, runaway and exhaustion. There's not a whole lot of back data on this. So like a gap like this and something that ends up being like a majorly popular company, it can still keep going. If this had previous levels of impulse waves that were similar to this in the past, like a lot of them, then we could say, oh, hey, that's more of an exhaustion gap with it. But right now we can't. It looks more like a runaway gap that there's still more potential on it. Who knows? Because it starts slowly and then goes and builds, and those can keep building. Okay, the oil chart. Let me go back to that one. This is going to be our last one here. So if I missed you, post it in the forum or bring it to League of Traders next week and we'll take a look. So here's our daily chart on oil, and what I'm looking at is the potential for this to kind of try to do a megaphone, but at the same time, I don't have this shown, but this breakdown here, it's not a measured move yet compared to the previous impulse move before it. So it leaves open the possibility for it to keep sliding lower. I know, like last month, I told you guys that I still thought that, well, I guess it was like the beginning of April probably, that I still thought that that we were going to still get moves lower on oil, and I still would not be too excited about buying this right now. We do have a little bit of a potential for like a baby momentum reversal intraday on this on like a 240 chart, but it's one that, because of the trend placement on the weekly, would also be higher risk. So these are things where, does it treat this like a time correction and then just lead to another wave down? It's another one of those tricky spots that we call the zone of pain, because it all depends upon the smaller little shifts in there and how those react and turn. So it can be just two little moves intraday that totally determine which way that's going to go. So I actually haven't traded oil at all much this last week, which kind of unusual since I'd been trading oil like pretty much every day going into this week. But then I kind of switched over to gold. And my last oil was on this, but I didn't hold it. And I just had it as an intraday. Put the specific session, please. How to stay away from do or die points. Well, you can't really stay away from do or die points because they're like the best opportunity zones too. So let's see, where did I have an intraday chart on that? I'm gonna grab a new one. Just a second, I'm posted in here. So the thing with the do or die point is that that's where your greatest opportunity is. So when you're looking at which way you're going to take something, do you try this as like, it's a little early for momentum reversal, but do you try it as a momentum reversal, or do you look for it to be a continuation short? And so this is where advanced trade management is so important. So if you're trying to time it right there, the smaller time frame shifts might get you into it as a buy, but then lack the confirmation. So if you kind of go in and out and like wiggle your position, you can get to a point where even if it fails, you can still end up with a small gain and then flip the trade based upon what happens on those smaller time frames. But right here, we don't know. So to take like a lower risk, more sure strategy, you would wait for the pop, wait for a shift, and then take something like the Phoenix. Or if it looks for the low side, you would watch that, and if that goes like that there, you would take that as the short. Those would be the higher probability setups. They might not be the best price entries for them, but they're going to be the highest probability sets. And you don't always get that confirmation setup. So sometimes you just got to go for it, buy it there, and if it just isn't going, go ahead and take your gains and then look for the flip. So that's why it's such a tricky zone. It's not the easiest levels to trade. And that's why I generally steer newer traders away from those levels to trade at. And you might say, oh, but you don't know. So why would you take any trade there? Well, because it still has the highest probability, and I can manage it using advanced trade management. But those skills take some time to become like second nature. So you want to do those and practice those on on your sim accounts first, or with very small contractor share size, until you understand the feel of, hey, is this really failing? Is this gone? Has this gone when it absolutely should have gone? Or is it going too long? All right, you guys, I am going to wrap this up and get this up onto YouTube for you. And feel free to harass me in private message to get it up for you, to get it up faster. I've got my little guy home here. I'm homeschooling too. Been dealing with a migraine all week, so I'm just a little bit distracted at the moment. Takes about 2 hours for GoToWebinar to process and convert all of our sessions. So harass me anytime after 2 hours if you don't see it posted yet. I'm just giving you full reign there. All right, you guys, have a wonderful rest of your day. And again, any questions I didn't get to, I will fit into classes next week. So just bring them up and remind me of them. All right, everyone, take care.